What's good, guys? Welcome back to the channel. So on this video, I'll be going through the pairs that we analyzed last week, and I will be going through the losses that we encountered on SPX and NAS100, showing you guys the lessons that I've learned and how to improve in the future from these lessons. So right on my chart is NAS100, and on my previous video, if you guys want to check the analysis, you can go back to the previous video. I predicted SPX bullish to the upside. You can see that on the monthly time frame, we are bullish, making higher highs and higher lows. NAS100 has been bullish to the upside. So on the monthly time frame, you're making higher highs and higher lows. You know, the first thing we look for is the trend. After we find the trend and we have identified that the trend is bullish, the next thing we do is our support and our resistance. So now that we've identified that NAS100 is bullish, we then come over to the weekly time frame to see if there are any chart pattern in favor of the analysis. But in this case, there was no chart pattern in favor of the analysis. So I then drew my support, my resistance. You can see how they have been drawn properly. And then I came over to the 4-hour time frame and I spotted this setup. You can see on the monthly time frame I identified the trend, weekly time frame drew my support and my resistance. Then on the daily time frame I came to find the setups that is forming at the moment. And you can see on the daily time frame we have this inner trend line that's been holding price to the upside, making what higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. At the time, NAS100 was actually trading around here. So I said to myself that I'll be buying when price break this CTL. But price broke it prematurely. You can see that this is not a nice buying area because one can buy here and price will then fall and stop you out. So I said to myself that I'll be waiting for a retest of the CTL. Once we broke out, I'll wait for a retest of the outer part of the CTL. You guys can remember on my BTC trade, the same thing happened here. We broke out and then I waited for the retest. And once we retested the outer part of the CTL, that was when I sold BTC USD to the downside. The same pattern is actually happening here. The thing about Forex is that what makes us profitable, our edge, are those patterns that we see every single time, those patterns that are familiar to our eye. So those patterns are our edge, and in this case a break and a retest of the outer part of CTL is a pattern that I normally see on the charts. So we broke and we retested the outer part of the CTL, and you can see that this is a 4-hour candle bounce. You can see that this is a 4-hour candle bullish engulfing bounce. The same thing with BTC. So this is an ideal setup for me to buy to the upside. So a 4-hour candle bullish engulfing bounce to the upside, I executed my buy trade around here. When I checked the chart, I saw that I was stopped out. The price moved a little bit in my favor and then stopped me out for a loss, which is okay. Now that we've been stopped out, this is a perfect time to come over to the chart and show you guys the lessons and the things that I did wrong on this pair. So we broke out, retested, I bought to the upside. Price moved a little bit in my favor and then stopped me out. This happened within a day. And you guys know that on my previous video, I also analyzed SPX. SPX and NAS100 moved the same fashion. So SPX, the same scenario occurred. On the monthly time frame, we are bullish, making higher highs and higher lows. On the weekly time frame, we are also bullish, and on the daily time frame, we are bullish, making higher highs and higher lows. I came over to the weekly time frame, drew my support and my resistance, came over to the daily time frame, drew this minor uptrend that has been holding. You can see that the setups are exactly the same. SPX formed a setup, you know, bounce off of trend line support with also Fibonacci, swing low to swing high. So this is an ideal setup for me. I then came over to the 4-hour time frame. You can see that we had a premature breakout of this CTL, and I was still waiting for a bounce, a retest of the outer part of the CTL, just like NAS100. So we did that, and I executed a buy. I had 2 trades open on SPX and NAS100, bullish to the upside. Now here's my mistake. NAS100 was an ideal setup. Why? Because we had a bounce off of trend line. You can see this 4-hour candle bounce off of trend line. This is an ideal setup for me to buy. But if I should come over to SPX, looking at this and doing my homework properly, I don't think this is a bounce. The thing about trading is that when two pairs correlate, when two pairs move the same fashion, for example SPX and NAS100, even though the setup didn't form on SPX, I was thinking that because NAS100 would go up, SPX would also follow it, even when the setup did not form. I don't know if you guys understand. NAS100 and SPX move the same way, but that doesn't mean that the entry criteria has formed for SPX for me to execute. If you look at SPX properly, you will see that there's a difference between this bounce and the bounce of NAS100. You can see that the 4-hour candle bounce of NAS100 was perfectly clear. I don't know if you can see it, a break and a retest. You can see this bounce, this bullish engulfing 4-hour bounce. It was perfectly clear. This is an ideal setup for me. But coming over to XPS, you can see that the bounce is totally different. This was not even a bounce. This was a break of the CTL. We bounced off of support. We tested support. This was not even a bounce off of CTL. We broke the CTL. You can see properly. So this is not even a setup for me on SPS, and I still executed it even when my criteria did not form. And this has taught me 2 lessons. Number 1 is that every moment in the market is unique. And number 2 is 3 lessons actually. Because of greed, I executed XPS even when the setup didn't form. Why would I trade 2 pairs that are correlated? That's being greedy because technically I'm exposing too much risk to the market. The forex markets, one should never trade two pairs that are correlated because you're exposing yourself to unnecessary risks. Before I executed this trade, I still knew that I was trading two correlated pairs, but I didn't think of the downside. That clouded my judgments because I thought that if NAS100 should go up, SPX should go up. When in reality, SPX never presented the entry criteria. So I learned from that lessons that trading correlated pairs, especially two correlated pairs at the same time, is exposing yourself to unnecessary risks because the downside is that when you lose times two. Instead of when you trade two different pairs, maybe you win one and you lose one. And that's the lesson I learned from this XPS trade. The reality is that I never presented any entry criteria because I was thinking that, once it wins or once it goes up, I'll win big. It doesn't happen in the forex market. The loss has actually taught me a valuable lesson, and also hope you guys have learned from the lesson too. Cutting out correlated pairs and focusing on inversely correlated pairs is the way to go because that way you're diversing your risks and you're not just putting it on one pairs that move the same fashion. So these are the lessons that I've learned from this trade, SPS and NAS100. So I will be cutting out either XPS or NAS100 and only focus on one of the indices to trade. Since they are both correlated, I don't want to overexpose myself to unnecessary risks. Now that we've had the loss, you've learned from it. What's next for SPS and NAS100? I actually don't know what is next for this pairs. But if I can remove this right here and actually draw my CTL this way, you can see that NAS100 is still consolidating for a blow to the upside. I still believe that this pair is bullish. But if I can bring out my Fibonacci from swing low to swing high, and if I can remove this trend line right here, you can see that this pair still has a potential to the upside. So what would happen now is I would wait for a consolidated pullback. A consolidated pullback would be enough. But for now, it's actually premature. There are no setups on this pair. Might probably blow to the downside. If that happens, I'm out on NAS100. Or if you can consolidate properly and break to the upside, then I might still get into NAS100 to buy to the upside. But for now, 50-50. After a loss, we should wait and see what the market has to offer to us to know how to adapt to the market. So for now, there's nothing going on NAS100 and SPS. I've learned my lessons from the losses, and I hope you guys too have learned your lessons from the losses. I actually wanted to do this video to show you guys how the loss went and the things that I learned from it. So hope you guys found value in the video. Like, subscribe. See you guys on my next video. Peace out.